We are holding strong support on Kadena, and anybody that's been in Kadena for some time now, what a roller coaster ride. Your emotions have been up, your emotions have been down, and that's measured by the swings to the upside and the swings to the downside. So we're currently holding a strong support on Kadena at the moment. This strong support has never been breached in Kadena's history. So does this create opportunities? Okay, Kadena is currently trading at 53 cents. So we look at the chart now. Are we bullish? Are we bearish? We're going to decipher this chart and then we're going to have a better picture by the end of this video. So 53 cents. First and foremost, we'll go over this support band. This is the important support band. And why is this important? Because it's never been breached. It's never been breached in the whole of Kadena's history. You can see this support band here. Made a bear market bottom. When was this? June 2023, bear market bottom, holding support. And then we had this volatile move to the upside. We monitored this volatile move to the upside and we knew that it was getting weaker because of two reasons. First reason was this. We measured this. It was a bearish divergence. It's a bearish divergence. You see price actions put in a higher high. You can see the RSI is put in a lower high. That was our first indication that we were going to get a strong retracement at this level. The second indication, and this was the main one, you can see the volatile swings to the downside during the bear market. We had the volatile swings to the downside, and then you had the lower highs, and then you come back down and you've got the lower highs. These lower highs act as significant resistance in a bear market, and you can see this major lower high here sat at $2.05, acted as major resistance. So that was the clues that we were getting when Kadena was putting in these new bear market highs on the relief rally. We knew that the bulls were getting exhausted. The bulls were getting exhausted. The bears were regaining control. And then on the back of that, this happened. So you had to move to the downside. What happened? You created a pennant. We know from the last video, how do you work these pennants? Simple. The higher probability you've got to move to the downside because it's following from a pole from the downside. So we were expecting a break and a close below. And if you got that break and close below, that was confirmation that this was going to put in a new lower low. So that's exactly what we did. We put in a new lower low and we haven't broken and closed below this support band. So this is our protection, this support band. And you can see that we're hovering at the top of the support band now. We're putting in some things here, guys. Putting in higher highs, and we're putting in higher lows. So that's important. So how would I play this, guys? I've had a breakout of this. Pull that, what we're forming. Forming a pennant again, guys. So we can look for a break to the upside. Simple. We can play this, break to the upside, and then you come back, confirmation, continue to the upside. Or break to the downside, a rejection, and a continuation to the downside. So it's all about monitoring. And what you'll probably see on this, guys, you're probably going to see price action over the next few days do something like this. Then the bulls and the bears are going to get tighter and tighter. Somebody's got to make their mind up. Upside, downside. That's how you can play it. Simple. These patterns work really well, and you know exactly when you're wrong. Just an example, if we got to move to the downside, how do you protect yourself? Here's the move to the downside. There's the lower high. You've got your stops above here. If you're wrong, bam, stopped out, minimal capital. That's how you can play these flags. That's what I'm looking for in the short term, guys. Then what we can look for is the stochastic. The stochastic's pulled back. We're entering oversold. So this is exactly where we want to be. We want to be oversold here whilst we're at strong support, indicating that as this pulls up, the bulls have got momentum. And what we ultimately want to do in the short term, in the real short term, is break and close above 64 cents. In the midterm, we need to break and close above 73 cents. Why do we know 73 cents is going to be an important rejection point? Because that was the lower high here. Similar to previously here, guys, we knew that lower high was going to act as strong resistance going forward. Same as this one on a smaller scale. We know that this lower high is going to create resistance. And what happened here? Resistance. So the bulls are pushing price up to the neckline here, up to this previous lower high. The bulls are pushing price up. The fact that the bulls have managed to push price all the way up to this previous high and reject from that previous high, that's bullish. That's showing that we've managed to retrace all the way to the previous high. The bulls have got momentum. That was followed by this big, huge God candle here, guys. This huge candle to the upside. Look how long it takes for the bears to exhaust this one candle. There's one candle. Then you've got 24 days. So it's took the bears 24 days to pull back and regain the momentum that one day of the bulls have managed to do. So guys, the bulls have got momentum here. What we want to see is another one of these God candles to the upside from this support, take out this previous high, then you're on your way. Ultimately, once we've broken and closing above the 73, that's tested as confirmation, then you're really going to see some progression on Kadena. So that's just my thoughts, guys. Let me know in the comments what you want me to cover next. Join our Discord group. It's completely free. I'll leave a link in the description below and you can put all your chart requests on there. We've got a new server open. It's got all the chart requests and it's got my schedule of videos going forward. So you can go and add to that by joining the Discord group. Okay, thanks, guys. As always, I'll see you in the next one.